Hello and welcome to BQ Prime. You're joining us on this special conversation with the management of Adani Wilmar Limited. The company has just announced its quarterly results. As we can see, there has been a 60% dip in net profit and 7% dip in revenues over the previous year. While we continue to see pressure on margins owing to high inflation as well as higher finance costs. I would like to ask, how do you assess the quarterly numbers and especially the impact of input cost inflation on your top line and margins?
Okay, Shrikant.
Yeah, so in fact, if I have to analyze the number for the quarter, I think it's a mixed bag for us. The good thing, what has happened to us is, of course, we have grown our volumes by 16%. So for a company like us, who are into the brands, who are into the oil and staple food, the volume growth is very, very important for us, irrespective of the fact whether the inflation is there or not. So we have grown 16% on volume. The revenues are down by 7%. Of course, it has got an impact of the price drop which has happened over the last quarter. So that's the reason why the revenues have gone down. But it's not the underperformance on the revenue because volumes are up by 16%. Right. When we look at the bottom line, there are basic 5 reasons why the bottom line got impacted. Of course, number one is the TRQ disparity for which the company continued in this quarter 4 for us, which impacted our soybean oil margins. Besides that, of course, the inflation kept impacting our operational cost, whether it is a diesel cost or whether it's packing cost or any consumables, which has been impacting the margins. The slide in the market continued in the quarter 4, and therefore what happens is that when the market is falling, the company like us who is dealing in the large volumes always be left with some high priced inventory which you have to liquidate, and that's impact your margins. And last but not the least, and very important, is of course the finance cost. We have seen the rate hiking which has happened over last year or so. The rate hiking cycle is still continuing, while in India, central bank has not increased the rate hike in last MPC meeting, but Fed is expected to increase and take another rate hike. So those have costed us very high because most of our borrowing, not most, but in fact all our borrowings is for the working capital. So that interest cost somehow could not be passed on to consumer. And that has impacted the bottom line. So if you ask me, it's a mixed bag. Volume growth trajectory, we are already there. I think on margins, it's a business risk. It keeps coming up and coming down. So I think as we go forward, we should be able to perform better.
All right. In terms of the current macro environment, I would like to know, is it looking better or are we continuing to see stress? And also with raw material prices now cooling off from their peaks, when can we expect margins to improve?
See, one is that the edible oil prices surely have come off. Wheat prices have also actually come up from the high that we saw 29 rupees, 30 rupees kilo. So major commodity prices have come off. Sugar is controlled. Rice is okay. So basically the basic staples basket for the consumer is now surely much better off than what it was 6 months back. We are seeing a very clear consumption increase in rural market. Quarter on quarter, we can see that. Let me tell you, from an average of 30% share of rural in food for the Q1, Q2, Q3, we saw 34% share in Q4. So that's an indication that rural has started consuming, which has been a matter of concern for all the FMCG players. But the first trickle comes from base commodity. So that is what consumers first buy. Second is that in edible oil also, we have seen the same. Now, one reason is that prices are low, so people are comfortable buying. And second, they can buy with the same amount, a larger quantity. So their consumption has gone up.
Right. But in terms of the edible oil prices, recently the government have asked all the retailers to cut down prices further. So are you looking at, can we expect further price cuts going ahead?
See, what the government has been asking is that, are you reducing your MRP in line with edible oil prices coming down? and we are with the government, and we have always been doing that. If you take an example, largest selling SKU is Fortune soybean oil, 1 liter pouch in Delhi. So that's a barometer or a benchmark for edible oil prices. It was 170 rupees MRP in January in Delhi. And May first week, that is the first we have announced the new rate as 140 rupees.
Okay.
So you can understand from 170 to 40, 30 rupees per liter has come down.
So the 140 rupees that you're talking about is from May, that is this month.
Yes, so that stock will reach, say, in another 10-15 days, because that is the inventory pipeline stock. So earlier, April was 145. April was 145, May is 140.
Okay. And apart from that, like in any other categories like mustard oil and have you also brought down prices?
Proportion. You're right, Sesha.
Okay.
In sunflower, it has been bigger cut because sunflower oil there has been higher, so it has come. So sunflower oil, if you ask me, I can tell you that Chennai is a reference market for sunflower oil. So it was 159, it is now 135.
Okay.
So it is lower than soybean oil. And mustard, if you go to Calcutta, because that is the benchmark for mustard oil in Calcutta, it was 175 in January. It is now 152 in May.
Okay. All right. So now, given that the prices are being cut, so going ahead in Q1, will we see the impact of lower prices also having an impact on the numbers?
See, lower the commodity prices, better is for the brand. Strong brands like Fortune gets an advantage. When the market prices are low, consumption of the brand goes up. The margins are surely better. When the commodity prices go up the roof, brands cannot increase at that speed because consumers can't pay or can't afford to pay. So we have to bear some losses. But when the market comes down, the consumers' affordability increases. So we have seen always strong brands do better when commodity prices are low.
All right, sir. So the numbers, like the food business numbers, are really encouraging. We are seeing that it has grown 53% in value and 38% in volumes during the quarter. We would like to know what role did price hikes really play in the value growth, and volume-wise also it has grown significantly, 38%. So if you can just give a little more light on how it is faring at the moment.
See, we have been concentrating on this category, which are our essential staples such as rice, wheat, sugar, pulses, oil. These are the essentials. And you are aware that the branded segment of these essentials are very, very low. The atta, which we all consume every day, only 12% is branded and packed. 88% is still loose. So there is great scope to convert loose to packed. So people look at value for money, good quality, consistent quality, and good brands. And that is what we have been driving. So all our products, food, as you said rightly, has doubled in 2 years. That is because our volumes have gone up by 40-45%. Value-wise, obviously, if the value of the wheat flour has gone up, our value has also gone up. So turnover has gone up. And this will continue. Let me tell you, consumers more and more will shift to branded. They want good quality product, and e-commerce is driving it more because e-commerce is helping us drive good brands. And in e-commerce, consumers buy known brands. So that they don't go for any replacement. They have quality assurance from the good brands like Fortune, so they go for it. So share of alternate channel, particularly e-commerce and modern trade, is 23% in grocery at all India level. But if you go to some towns like Pune, Gurgaon, NCR, Bangalore, there can be 60% business coming only from e-commerce. So that is the type of market that is. So good brands, e-commerce, categories which are nascent in branding, all are adding value. And Adani Wilmar is obviously playing this.
Right, sir. So when you talk about e-commerce, are you also seeing a significant growth in terms of your own D2C model?
See, we have our D2C Fortune Mart from where we have Fortune Online and we supply to online. That is increasing. But share-wise, it is not so significant. It can't compete with Big Basket or Flipkart. But surely it has its own customer base. We have consistent buyers who come and join online and they buy. Online is not available across the country, but it is only available in 25 cities. So in those cities, we have seen there is good traction. And we have seen those who buy, they continue to buy from Fortune Online.
All right, sir. So during the year, we have also seen that the company has gained market share across its food portfolio, like you also mentioned. Could you give us a split, like category-wise, just to understand the picture better?
See, if you take wheat flour is in the range of around 4.8 to 5%. Although we are number 2, but I see a lot of room to grow from 5% market share. And that is why we are saying that we are bullish on it, because we know for sure that Fortune Atta will be bigger than 5% market of the country. Similarly, you take rice, we are at around 7.5%, 8%, including Kohinoor. We have a great way to go up. Besan, although it is not a Nielsen study, but we know we are around 18-20% of the market because we are the largest besan player. That is also growing very fast. All these products have got great significance and consumers are buying it, rural buying it. So overall, I think you will see our market share going up.
All right. Sir, you have always mentioned that, Adani Wilmar would target larger food segments with enough headroom to grow. Are you looking at any specific, category that you're looking to enter? Basically, I would like to know your plan in terms of expansion going ahead.
See, the present focus is basically to ramp up production distribution of the base material. That is, when I say wheat, then I say wheat as a wheat, then wheat flour, atta, then I say maida, and then suji, rava. These are the derivatives. So there is a great opportunity to expand this category. Second, we are getting into non-basmati. So non-basmati, Bengal has a different variety. Baskati Miniket, the Maharashtra has the Kolam varieties. South has Sona Masuri varieties. So everywhere there's a different variety of rice. So there is a great opportunity to enter. Like this, we are categorizing each product and seeing the regional preferences and working on the regional requirements. After this, value-added products, obviously we are studying and ready to eat or ready to cook type of products. We have launched the Kohinoor biryani kit because we felt that that is a product that consumers would like it. Amazon is showing very good results of it. So such products will surely come.
Okay. So are you also leveraging your overseas demand to boost the packaged food segment?
See, overseas Indians are there. Wilmar has a Goodman Fielder in Australia. They are the owners of that. Goodman Fielder is a widely distributor company in Australia, possibly the largest bakery product distributors. So we are working with them and we have started supplying them rice. Wheat flour will go now. So slowly other Indian products will go, which the Indian diaspora in Australia wants it.
Okay. And what is the current share of exports to your overall revenue?
Volume wise, very small. Total export as a company is around 4,000? 5,000 crores total. But food is small. We have castor oil as a big exporter, oleochemicals. Then rice, we have 500, 600 crore is rice.
Okay. So going forward, what is your outlook on demand, if I have to ask? Because, like you mentioned a little bit about rural demand picking up. So can we expect better demand going forward? Or in terms of challenges, we also see, El Nino and things like that playing up. So how do you see the demand going ahead?
Let's see edible oil. Edible oil per capita consumption is hardly 16.5 kilo per head per annum. Now, if you look at Pakistan, 19.5, 20, China is 24. Global average is much higher. So will India consume more oil? I think yes. India will consume more oil. Now, this young Indian population, when they get more money, obviously they will eat more. Now, Bihar, UP, 25% of the population of the country, that side, consumes hardly 10 kilo per head. So there is a great room to increase the per capita consumption of edible oil. Last 6 months, we have seen India consume 8% more. So you can take from me that India will consume at least 6 to 8% higher in terms of edible oil consumption. When it comes to wheat flour and all this, average consumption is 62 kilo per head wheat flour, but branded consumption is hardly 12%. So here 12% can become 18%, 20%. So the branded share will increase. Like that, in each of the category, there will be large consumption in brand form. Now, when it comes to your weather, you are saying El Nino or anything. Yes, global warming, weather issues, these are all in thing now. It is not surprising that there can be any time monsoon, that means coming in and destroying your crop. This is now becoming something like, yes, it is acceptable thing now, globally also, not only India. So I think still irrigation is there. Say 99% irrigation is there in Punjab, Haryana. So good, bad, whatever it is, basmati crop will not be impacted. Rest of the country, they are predicting not very bad monsoon. They are saying, okay, maybe little poor, but still better. So I think overall, not so disturbing as of now, unless we get into July, August, then we'll come to know how things are shaping up.
All right. So my last question would be on the competition. So there is rising competition in the FMCG market with newer players, to be very specific, Reliance pouring in. So can we expect price wars in the FMCG segment, and Adani also playing up with the prices, going ahead?
See, earlier the same question was asked. I said that it is always good to have good competitors, bigger and better competitors. One brings more efficiency within us, plus the market grows. In a market where hardly 8%, 10% is branded, what are we going to fight for? From that 8%? I don't think so. We all players would look at enlarging the market from 8% to say 20% branded share. And once it becomes 20%, means you are doubling the market. Once you double the market, can one company only take the entire gain? No. There will be 2, 3 big companies who can do it. And surely competitors like them will add value and will give more value. And there the margins are not so great that we will cut price war. There won't be price war like in cosmetics or personal care products, but it will be a war of brand building or brand share. So mind share. So possibly we'll invest in brand building more than anything else and create brand strength or brand equity for staples and food business.
All right. So just one follow-up, like you mentioned about investing in brands. So are you also stepping up your investments in advertisements and promotions?
We are one of the largest in edible oils promotions. We have taken Kohinoor. So surely we are investing big money in Kohinoor brand. We have Fortune also. We are investing in Fortune, and you will see a lot of activities in terms of brand building this financial year.
Okay. All right. Thank you so much, Mr. Malik and Mr. Shrikant, for talking to us.
Thank you.
Thank you, sir. Thank you.